Ladies and gentlemen, good day and welcome to Q4 FY22 earnings conference call of Nazara Technologies Limited, hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher Private Limited. Thank you, and over to you, Mr. Joshi.
Thank you so much. Good morning, everyone. On behalf of Prabhudas Lilladher, I welcome you all to the 4Q FY22 earnings call of Nazara Technologies. We have with us the management represented by Mr. Nitish Mittersain, JMD, Mr. Manish Agrawal, Group CEO, and Mr. Rakesh Shah, Group CFO. I would now like to hand over the call to the management for opening remarks. Thank you, and over to you, sir.
Good morning, everyone. This is Nitish Mittersain. Welcome to all of you for Nazara Technologies Q4 and FY22 earnings call. We have uploaded our results presentation on the exchanges, and I hope everybody has had an opportunity to go through the same. Nazara has already established itself as a leader in the Indian gaming industry, and it is now strategically positioned to capitalize on the tailwinds in our industry. Despite challenges caused by changes in Apple policies, regulatory disturbance in real money gaming, and the negative impact of COVID-19 in live esport events, Nazara has still delivered a strong performance in FY22. This is a great demonstration of our diversified platform strategy that allows us to continue to grow and remain resilient to any temporary headwinds in a particular segment of our business. In FY22, we generated revenues of rupees 6.21 billion, up 37% year-on-year, EBITDA of rupees 946 million, up 109% year-on-year, and a PAT of rupees 507 million, up 273% year-on-year. We are glad to report that all of our business segments are profitable, and we have added significant cash balances, which now totally amount to rupees 7.3 billion as of March end. The company remains free of debt. The above has been achieved without incurring any significant burn or losses, and all our companies are driving growth along with profitability. However, it is important to understand that in the phase of growth growth and market leadership far outweighs near-term margin optimization, and we are very clear that we will continue with a strategy of prioritizing growth over margins into FY23 while remaining profitable and cash flow generative in every segment of our business. In FY22, we have added many new friends to our Friends of Nazara network. These include PublishMe, DataWorks, OpenPlay, the events IP from OML including NS7 Weekender, and most recently Wings Gaming Accessories. We have also made successful investments in Rust Media, with whom we are launching a unique gaming entertainment show called Playground, as well as investments made in global gaming funds, Griffin Gaming Partners, and Bitcraft, through which we intend to drive multi-pronged collaboration. Finally, I would like to conclude by saying that Nazara has a 22-year track record of creating value for its shareholders, who have believed in our vision of making India a world gaming powerhouse. We have been through many cycles right from 2000 onwards, and our DNA is well adapted to make us anti-fragile in such times. As a gesture of our appreciation towards the shareholders' faith in us, and to commemorate our first anniversary as a publicly traded business, we are pleased to announce a bonus issue in the ratio of 1 bonus share for every 1 equity share held. Now I would like to request Manish to walk through the financial highlights. Thank you very much.
Thanks, Nitish. Good morning, everyone. Welcome to Nazara's quarter 4 and full year call, and look forward to interacting with you in the Q&A. I will quickly summarize the information which is also uploaded in the presentation available on our site. As Nitish has also kind of given you a flavor of the numbers, in the full year we delivered 621 crores or growth of 37%. We delivered 946 million in EBITDA, 109% up, and we delivered 507 million in PAT, which is 273% up. So the resiliency of our portfolio, the momentum which we have seen in gaming, makes us very, very happy to say that this is a guidance which we had given in September end to all of you, saying that we will grow roughly in 35-40% in revenue and 12-15% EBITDA margins. And we are happy to report that we have exceeded and met those kind of guidances which we gave you in September. As you are all aware that we had few headwinds. We had a headwinds of Apple changing its policy in April 2021, which impacted our gamified segments growth. We had on and off COVID-19 continuing to really impact the offline events, which has a negative impact on our ability to generate revenues from brand sponsorships of live events and also kind of accelerate the penetration of esports. And then it also has a negative impact on Sportskeeda as well as Next Wave, which really get a bump up when there is a lot of sporting events happen in the country. So in spite of that, we have been able to take all of this in our stride and deliver numbers which we had kind of projected and guided all of you. We are also happy that we just not really kind of look at what is the growth, revenue growth, but we are also, all our businesses are cash generative, profitable, and as of 31st March 2022, we have 723.1 million INR of cash across the group. And that's what we are really kind of, while the current portfolio has its own momentum and it's growing, we believe that the flywheel of M&A will now also start at corporate as well as subsidiaries, as we have seen with Nordwin last year. And with the cash being accumulated in most of the subsidiaries, we are looking at how to deploy that cash to drive organic and inorganic growth. I'll quickly kind of take you to segments. Esports has become our largest segment. It contributes to 49% of our revenues. Over the last 3 years, this segment has delivered a 90% CAGR, with Nordwin growing over 65% and Sportskeeda over 130%. If you look at the full year performance, the segment has grown 79%. And it has not just grown in revenues, but has also grown in your absolute EBITDA numbers by 43%. As Nitish highlighted, this is a segment which is very important for us to build. We are the market leader here. We need to constantly keep building the ecosystem, keep investing in the ecosystem, whether it's IPs around events, IPs around content, IPs around talent, and forge new partnerships. Here, our objective is to continue to have this high growth momentum and not just really at this juncture start looking at EBITDA maximization. And that is very important to note because esports, our conviction has been very, very strong always. And we believe that esports will be the biggest viewed sports entertainment format in next 5 to 7, 10 years. And we don't want to be really kind of losing that amazing and massive opportunity in India, South Asia, and other emerging markets as we really look at. We have seen how the esports viewership is growing in the ecosystem. The data point is that BGMI launch, Battleground Mobile India launch, was concurrent viewership was as good as the first match of IPL, which kind of underlines the conviction we have on the esports viewership in coming years, that it's going to be really, really important. And hence building those IPs and investing on the IPs across India and other emerging markets is very important for us. We believe that with economy opening up, offline events opening up, cinema, malls, restaurants, everything opening up, offline events are going to be a reality, keeping fingers crossed. And with that, we believe that our IPs like India Premiership, DreamHack, NH7, Bacardi Reshuffle, YouTube FanFest, all of those IPs will see light of the day this year. And those are all kind of long-term properties with sustained brands and advertisers backing them. We see then a very healthy upside coming to the business in this year. Now, this segment, as all of you know, is broadly driven by two companies. It's Nodwin and Sportskeeda. Nodwin continues to really remain a very stellar growth. I delivered 2108 million in FY22, which is 55% increase. It delivered an EBITDA of 157, 29%. And if you look at from the business upside, as I mentioned, this coming year, we see a very, very clear, strong business upside coming from the offline events, which will add 70, 80 crores to the Nodwin revenue number this year. Our media revenues are increased by 84% in quarter four, and it accounts for 20% of the overall business. We are also kind of embarking on building a D2C strategy where we have done acquisitions of merchandising company Planet Superhero, gaming accessory company Wings, and we have also our selling of ePrints business is doing great. Combination of that, we believe we can really unlock the community which comes to Nodwin in terms of participation of the tournaments, in terms of viewership, to really create a very robust gaming D2C business, which is kind of opportunities begging for itself in a country like India with the growth of overall gamers as well as hardcore and midcore gamers. We also kind of created amazing partnership this year with Gameloft for esports in this, with FIFA for EISL, and we have also increased our partners from 27 to 103, which clearly demarcates or demonstrates the excitement around in the ecosystem comprising of brands, OTT platforms, publishers all around esports, and everybody wants to kind of really work and talk to us on how they can really reach to this community through esports. Our Sportskeeda is the other one. Sportskeeda delivered 792 million INR, 130% growth, with a 64% increase in EBITDA, delivering 274 INR million. So these are the numbers, but the story really behind these numbers is amazing. A company from India is now really kind of in the top 10 sports site in US as per ComScore. We are number 7. We used to be 17 a year back, and that's what we are inching up. We are seeing some amazing traction in terms of users across US sports. We are seeing traction of monetizing them through programmatic, and we are also really looking at our esports business contributing 20-25% of the overall MAUs for the Sportskeeda, and we are by far the largest esports site in India by any stretch of parameters which you can think of. If you look at our growth is on a very, very solid ticket. The growth has really happened from addition of content, high quality content which allows you to get more index search, social content sharing happens, which has delivered an increase in a MAUs of 13%. We are also going to increase more US based sports. We are also going to really increase video based formats. And overall, this business is a very, very strong momentum. And the combination of Nodwin and Sportskeeda really puts us in a very pole position in esports business, not just in India, but globally. And it's a complete dominance and leadership. A small line about PublishMe, we acquired that in September. We have now happy to note that we have created a very, very strong team in Middle East, a very capable team which has been now put together so that this year we should start seeing discussions with a lot of game publishers and brands about partnerships in UAE, in Saudi Arabia, and that's what we are kind of really looking at. This business, because we set up the whole team, as you would all appreciate, a team doesn't really become productive from day zero in Middle East, and this business is an investment phase, and over the year we will be working on this business to ensure that we have meaningful partnerships and we can really become a go-to game marketing agency in Middle East for global publishers and global gaming brands, and also create synergy between Nodwin and PublishMe to really expand our esports footprint in Middle East. I'll move to Kiddopia, which is a gamified segment. All of you who are on the call have kind of discussed this. The We delivered a 16% growth in revenues. The growth momentum has slowed down. If you look at quarter 4 year-on-year, it's almost flat. It's purely because of the new user acquisition, which is becoming challenging on account of the Apple IDFA policy. We are doing multiple experiments here to ensure that a growth momentum can come back, including the mix of the channels, which at the beginning of the year last year to now has completely changed. And that speaks a volume about the resiliency of the team, where a lot of global players have demonstrated drop in their revenues, including Netflix, Zynga, Facebook, Unity. We have been able to really change the mix of advertising spend and ensure that we are delivered 16% growth, or we have not declined in quarter on quarter. And that's what we are really doing. This has also taken its toll on cost per trial, which is increasing, and it will stay at that level for some quarters, where we are really looking at more experiments. But the important thing is we have launched a brand campaign in US. We believe that the performance marketing can play that much role in the new normal of Apple policy, and hence we are looking at how to build an enduring relationship with the kids and their parents through a very, very warm brand campaign, and that has been launched. Any brand campaign is not a magical pill which will create immediately. What we are really looking at some of the lead indicators of searches, of organic downloads, all those parameters we will be keeping a watch. But we are now looking at also merchandise. We have Captain Kid is an IP, is our own IP. We have looked at how do we reward our loyal users through some kind of merchandising and build brand affinity. So there are many experiments happening on this particular IP, so that we can really look at from a growth point of view. I will cover a lot of the nuances in the Q&A, because I'm sure there'll be a lot of Q&A on marketing spends, LTV, ARPUs, and then we can do that. Freemium business, we had a modest growth of 9% year-on-year, 21 crores or 213 million of revenue, 19% EBITDA margin. The two things which I want to highlight, we believe that the massive amount of community cult following that this IP has with the proven game engine model, a foray into Web3 can be very successful, and we are actively working on that to really create a cricket offering in Web3, leveraging our strengths. Given that some of the new crypto native developers which are coming do not have proven game engines, do not have proven communities, it kind of puts us into a pole position to really capture cricket in Web3, and that's what we are really working actively. And we are setting up a blockchain team to really look at what kind of form shape we will be doing it, and you will hear very soon from us. In terms of our M&A in premium, we have mentioned that before. This segment needs to be really a much larger and bigger segment, not just 213 million revenue. And our M&A will be biggest focus in this year in terms of M&A, and we will be looking at game dev studios who are doing in the vicinity of $3 to $5 million and have high growth potential. And that's what we will be looking at in M&A this year. On the Open Play, which we acquired in September, I'm very, very pleased to inform you that we have grown the company. When we acquired, there was net revenue run rate was around in the vicinity of 42 to 45 crores. Now that run rate is almost 65, 70 crores. So that is something which has been achieved through a very strong data-driven tech platform, which has looked at operational efficiencies of increasing ARPUs of repeated users, creating a predictive modeling in terms of new user acquisition, and that has resulted in growing almost like 14-15% month on month. Our underlying ratios of cost per player has also come down, and we are looking at ROAS, which we used to be a break-even in terms of 8-9 months, has come to 6-7 months, which is quite a very difficult task, and given that we are a challenger in a highly cluttered ecosystem of rummy operators, where top 3-4 guys are very, very large. In spite of that, we have been able to kind of achieve it, and we are proudly say that in the industry, we would be same as some of the top players in terms of our ROAS on break-even. And that gives us strong footing to increase our user spends as we keep moving post-IPL scenario. And that's what we are discussing with the team. Our positivity on the database automated systems has also ensured that we have an uptick in EBITDA. However, at this juncture, I want to underline that if I can get an unit economics of 5, 6, 7 months of break-even and then LTV CAC, which we have in this business, I would rather kind of press the accelerator on growth rather than trying to kind of maximize EBITDA. As we had mentioned when we had taken that, we have really looked at the product and tech capability of this team. Glad to again inform that now we have built an underlying platform which can consolidate any number of brands with the one data view, one common tech platform. And the first company which we are integrating is our own Halaplay. The integration will be finished after the IPL. We didn't want to touch the Halaplay during IPL season, but all the underground work has already happened, and we are kind of amalgamating into one common tech platform. And that will be a good test and confidence for us as we go in consolidation in this area in the year forward. Our telco segment has declined by 17%. We delivered 624 million revenues. The EBITDA margins, as you can see, has improved from last year. It is 22.8% versus 15.2%. The absolute EBITDA has also grown by 25%. This is a cash cow. However, the question which is there, are we kind of really writing it off in terms of decline? No, we are kind of really working with new partners to see if we can really stem the decline and get it back to a growth phase. In couple of next quarters, we will be able to tell you more concretely whether this should be taken as a growth driver or should it be taken as status quo, or should you budget some decline of 5, 7, 10%. So we'll come back to you. DataWorks, some of you who are aware, we acquired the company we finished the acquisition in the April. The consolidation will happen from the April onwards for this business. This is an enabler capability building play for Nazara so that we can really be a strong publisher in years to come with the help of a deep ad tech stack which can help us to optimize user acquisition as well as ad monetization. The company is doing fantastically well, and in the first quarter, we will talk more about DataWorks, and during this quarter, I will give you more KPIs of DataWorks and I'll give you more insights on DataWorks. But however, the company is doing very, very well, and the integration with some of the subsidiaries which are natural integrations, whether it's Sportskeeda, whether it's NextWave, with OpenPlay, Paperboard, the discussions are happening between the leadership teams, and depending upon the experiments which will start, we'll be knowing that how and where we will be successful and where we will not be successful in driving the synergies. So in a couple of quarters, you will come to know on the DataWorks on both on the synergy side, but on the KPIs and its growth in quarter 1 onwards, we'll start sharing more details. Last but not least, I have mentioned this multiple times on M&A. Our current portfolio is super strong, will deliver a lot of growth, but we do not want to kind of just sit and look at the current portfolio as some of you would like to do. We believe there are the opportunity of our gaming and the segments which we are is an amazing opportunity in front of us, and we want to kind of really plug white spaces which we have seen, whether it's white spaces in gamified learning, whether it's expansion of esports into other emerging markets, whether acquiring of more game dev studios in premium, or whether consolidating RMG, or on the influencer building capability side. We would love to kind of really do an M&A because we believe those are essential white spaces for us to fill and create a very, very strong Nazara, Friends of Nazara network as a platform which we can really drive completely. The capital allocation discussion for us is very simple. All our companies are really generating cash. If they need to kind of really look at, they can deploy their own cash. If they need more than that, we can always sit down. So that's not an issue for them. Our capital allocation will be on M&A side or increasing some equity in downstream subsidiaries wherever we think it's an amazing opportunity for us to kind of increase our equity, B, reward the founder for the great performance they have delivered. Our capital allocation predominantly would be on M&A, and that's why and the M&A at subsidiary level as well as at the corporate level will be a constant. To summarize, I think this is supremely important for you to understand that this is a company which is on a very high growth path. We are a company which is really looking at these white spaces and the growth of our own portfolio, and we are on a very, very strong wicket. And we have a DNA, and I like to kind of reiterate a DNA of anti-fragile, where we always believe that keep doing the work from first principles, look at businesses from first principles, and keep your head down and keep delivering the performance year after year. Some of you may look at sequentially on quarters. I will urge you to look at on a year-on-year basis because of the seasonality, so that you get the right picture and you are not kind of frustrated yourself on looking at the numbers. So I will kind of hand it over to Mr. Joshi for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Jain from Fairview Investments. Please go ahead.
Yeah, thank you for the opportunity. So my question is on the Nodwin business specifically. So if I do a deep dive, like we can see a drop in profitability for the quarter as well as for the full year. So like for FY22, we have dropped from say high single digits to mid single digit. So if you could, clarify, is there some structural change in our approach or, in the market? So that is the first question. And the second one is, with the increased competitive intensity from players like Sky Sports, what is the path for this business going forward? Thank you.
Good morning, Nitin. Thanks for the question. Let me just kind of answer both of them. Nodwin, if you look at it, in FY21, they delivered a 9% margin. In FY22, it's a 7.4% margin. I think in the presentation which we uploaded, it also includes published numbers, and I will ask my IR team to segregate them so that you can get a clear picture. So it's a 9% to 7.4%, while the revenue has grown by 55%. I've always maintained Nodwin would be a 6-7% business kind of number. Your 9% was predominantly because of no offline events really happening in FY21. In FY22, we had NH7 in March, and we have not have more and more in offline events. Going forward, I would say you should peg Nodwin in the vicinity of 6 to 7%, because we would like to do more and more offline and build esports ecosystem. We will invest in new IPs and also augment our current IPs. So that is where I would kind of really urge you to look at from a Nodwin perspective. We are not really looking at the operating leverage hitting in the market right now. The operating leverage will come in when there are two factors really driving. One factor is multiplicity of OTT platforms bidding for the same content. We are already starting to see that happening between Loco, Router, fighting with each other and bidding with each other for the similar kind of content. And we are also seeing more and more platforms really emerging. And in the next 3-4 years, that should drive the pricing of the content and IPs if your IP is big. The second piece is the more and more games. If you look at, you have predominantly very few games in India which can really have an esports viewership and can say that we can command a viewership which is worthy for some OTT platforms and brands to look at. As more games really kind of come into India in the next 2 years, you will have far more opportunities to create more combinations of games and events for you to drive your margins. So I think that is where we are. On the competition piece, my 2 cents are very simple. We are kind of talking about 211 crores of business revenue. I'm not sure if you have checked the Sky numbers. They may be sub 5-6 crores or maybe 7 crores at best. Second thing is I would really look at all the esports, more and more tournaments to come, because the more tournaments happen at grassroots, the better it is for a feeder, for eyeballs viewership for us. Now, as I've always mentioned, NODWIN is in the business of building IPs and the top 200 players. The grassroots is what we do with publishers to increase our catchment area for viewership. And many such players which will come in the market will only increase the grassroots for the large IPs to have more and more concurrent viewership as well as overall viewership. So it's a very welcome thing for us to have in market.
Great. So that's quite helpful. If I could just slip in a follow-up to the first question. So are you hinting that due to the competition between the platforms, Loco and the other one you mentioned, are you hinting that there could be a pricing leverage here going forward? Some kind of pricing power?
So Nitin,
for us? Yeah.
Any sports IP always works on a pricing power coming out of their IP strength and the viewership increase. And the case in point is very simple. You look at the media rights of IPL in the last 3 bidding rounds, right? And you will yourself see the pricing power which is coming in. Or you take any kind of a sports IP which happen, whether it's a FIFA broadcasting rights or it's a Wimbledon broadcasting rights. So fundamentally, whenever a sports IP keeps becoming bigger and larger than life, the pricing power comes in because the platforms will like to have head content to create more users coming to their platform.
Right. Okay, that's it from my side. Thank you.
Thanks, Nitin.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Thank you. Hi, Manish. Good morning. Manish, the first question was on Kiddopia. You mentioned in the presentation that you are looking at, I think, an incremental almost about 1.6 million spend over YouTube as well as on brand building next quarter. Can you just help decide whether help us with any thoughts on are this targets what are the targets which you have internally which will decide the success or failure of the exercise? Is this something which will be right now on a trial basis, or do you expect it to continue over next few quarters as well? And also, are they being done outside the iOS? Given that they are being done outside the iOS ecosystem, is there a way to monetize them outside as well without compromising on user experience, or you still don't think that is an optionality which is there with you?
Hi, Mukul. Good morning. Nice to hear from you. Mukul, on the 2 things which you mentioned about. So if you look at broadly, we do 800K on a month, if you would see as business as usual. And the mix of that from the last year where you used to have 60% on Google, 30% on Apple, 10% on Facebook has considerably changed. Apple remaining the same, but Facebook and Google have gone out, and Unity, RM Source, all those other channels have come in. So that's where your current staple bread butter is coming from, 800K. We believe roughly around 300K odd we can spend on YouTube, because YouTube used to be one of the big components within Google of 60% that used to kind of drive a lot of scale. We are seeing some green shoots. It's still on a trial experimental phase, to kind of quote your words. But if we really kind of can get that back, the growth can be much higher, because YouTube, as you know, is a great channel for us to. It can give us a lot of volumes if we can able to crack it. That's that part, and roughly 300K is what we are putting for a brand campaign, which we are really wanting to create a more mark of the funnel trials for Kiddopia. We are running it across multiple touch points, whether it's connected TVs or whether it's broadcasting or even on YouTube or other publishers which are relevant for this. And how we measure a brand campaign. YouTube campaign is still fairly straightforward because you will be able to figure out your cost per trials. But on a brand campaign, you can't have a direct correlation for a cost per trial. So the indicators which we are going to look at, how is that organic searches of Kidopia as a brand is increasing. We are going to look at if there are increase in visitors on the page of App Store and Google from these campaigns. That is the kind of indicators which we would like to track to see the efficacy of a brand campaign.
Sure. And the other point was about given that these are outside the iOS ecosystem, is there a way to build them outside and save that 30%?
I don't know, Mukul, on that. Right. I don't know on that because is that the problem are we solving now? We are not. The problem statement we are solving is how do we get more and more velocity of new subscriber addition into the business. At this juncture, I don't think the 30% is a problem we should be really looking at. That's a good problem to solve once we have seen, let's say, a marketing campaign working or YouTube working, and then we come into efficiency of optimization of margins. And that's where we will come into it. But right now, our single mind razor focus is how do we get velocity of new subscribers increasing without compromising on their retention, basically without compromising the quality of users.
Sure. And I think, second question, I think broadly during your introductory remarks, over, I think, multiple statements you have kind of peppered it, but how are you looking at the M&A strategy after the recent price correction? Do you expect the interest of, potential targets to be more on cash deals, given that the broader market price has corrected so much? And, how much of the cash you will kind of earmark for M&A?
So, Mukul, correction has happened across the market, not just for Nazara, right? And I'm sure if you talk to a lot of people who do in the private deals, the valuation expectations or the excitement or exuberance around the valuations, even in the private space, has come down quite sharply. That was also giving us an opportunity to look at more and more studios outside and also in India, because the same discussions which were happening at different multiples are happening or can happen based on my understanding with bankers and some of the founders at the lower numbers, because the investors sitting there also have realigned their expectations. So I think it's an overall correction which is really going to help. It's a relative. It's not an absolute for Nazara and somebody else. The second thing is we are also kind of really looking at deals where we can really create a combination of, let's just to give you a perspective, if in real money gaming space, we are kind of really saying to the founders that you can merge your equity with OpenPlay and create and take that equity rather than Nazara's equity, because that's where you can now build scale. And the companies which are needing to grow, they need to really look at 1:1 becoming 2.5 or 3 or 5 or 11, and they understand that. So a lot of your equity dilution, which is you could avoid by having a downstream consolidation happening, while you can pay some cash, which you have raised at a higher value, and put it to use for your deals. So these kind of discussions will be we'll be doing that. We believe that the Nazara's goodwill and the track record of scaling companies after taking them over really is a very, very strong goodwill which we have among the founders, and that is really will help us in doing these M&As.
Sure, no, that was really useful. Thanks. Just a small clarification, if I may. There was a small 10 crore investment in Kidopia. Was there a requirement for cash infusion, or is there something which more cash requirement can come in from that side?
No, Mukul, it was secondary, and this was as per our shareholder agreement. If the founders have achieved their targets, which I remember was 170 odd crores, if they had done it within a time period, they were entitled for a 10 crore secondary from Nazara, and that's what we did. And as I mentioned in my opening remarks, we'll be happy to have founders who are hitting the ball out of park, and if they need some secondary earnings, we will not hesitate, because that's our way to kind of really demonstrate our endorsement of their great efforts.
Fair enough. Thanks a lot for taking my question, and best of luck for 2022.
Thank you. Thanks. Look forward to many more interactions.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Deep Shah from B&K Securities. Please go ahead.
Thanks, Manish, for the opportunity.
Sorry to interrupt, Mr. Shah. Your audio is not very clear. I would request you to come under handset mode if you are on speaker.
Is this better?
Much better.
Yeah. So thanks, Manish, for the opportunity and for the detailed clarification at the start. Manish, 2 questions from my side, both on the esports business. One is about your own IPs and then the events you do for others, whereby some events are streamed on our channel and then some are not. Is there a way you could help us better understand the differences and their respective contributions? Because where I'm coming from is, one, how do we read the content hours metric that you provided? And second, when we talk about increasing share of distribution money or broadcast money, I think a lot of it will only flow to us in our own IPs, or rather events which are on our own streaming platforms. So if you can help us better understand that, that would be very helpful.
Perfect. And I think a lot of clarity lies in your answer, and I'll just kind of pull that out. So we do 2 types of events. One, we do white label, what we call white label events, which we work with the game publishers, or let's say brand, or let's say a platform, which wants to kind of really attract more and more people at grassroots level. Now, a grassroots level will not kind of really attract so much of viewership, because you're not having the best of the players really playing. That becomes a cost plus model for us. And that's why it's called white label. And that's very important for us, because it seeds the market, it builds the esports market, and it becomes a feeder to our viewership of our top IPs where the best players are playing. Now, what is our IP? Our IPs are IPs which we are organizing, which we are investing, which we are defining the price pool, and we are taking the risk. It's not a cost plus model. You are investing in execution, you are investing in price pool, you are investing in marketing of it, and you are investing in kind of really building a long-term brand out of it. Now, those are the IPs, as you rightly said. They will have a price premium over a period of time, and that's the sporting IPs is our moat and will remain a moat, and hence it is important for us to keep strengthening our current IPs and building more IPs built across different cohorts and segments of consumers, players, games, geographies, etc. And that is where this business is all about. Now, if you look at one thing which you mentioned, and I want to correct, Nodwin is not into a channel. It is not having a streaming platform of its own, because we don't believe that that's a very, very path to profitability business, at least for next 3 to 5 years. And hence, what we have done is we have kind of restricted ourselves to create premium IPs and content thereof. And then we partner with OTT platforms which are wanting to have that content and pay up for the viewership on their platform exclusively. So we don't have any channel. Our IPs, since the market is still in nascent space, we try to kind of build it on YouTube, because YouTube is still the biggest reach and the widest reach, and it creates more and more viewership, and the IP's strength keeps increasing until unless there is a significant amount of money on the table for us to really take our IP onto some platform which has much lower reach. We would not be very open to doing that. We would continue to build the IP viewership and IP strength on YouTube or any other channel which can give us far-reaching reach. IPs which we are creating, like Watch Hours, which you spoke about, those are the IPs we are working with publishers to create them. And these are long-term relationships, because your Valorant is a game which is very popular in PC users. As and when mobile happens, it can be popular. You can't really just be dependent on one game for your viewership. and you need to co-invest along with the game publisher to really build that ecosystem. And that's where we really come into picture as a long-term partner for any game publisher.
Fair enough. The second question is on, so we had earlier spoken about trying to get in live advertisements in our streams. And I think in February, we had also acquired 51% in the Rust distribution. So any updates on that?
So two different questions. Rust for us is a content play. And as Nitish made in his opening remark, we are working with Rust to capture one area of gaming which is not yet with us, is a gaming on entertainment content, but with a very, very strong context of gaming. And that's where the Rust capabilities come of creating content, distributing content, monetizing content. And that's why this investment and partnership is there, where the entire gaming monetization will be kind of coming to us. And we will be working very closely with Rust to really give gamers insights, the influencers which they need, and co-create these kind of IPs. That's where the Rust is. In terms of streaming and advertising on streaming, as you would appreciate that when you do an exclusive deal with a, let's say, a local router, it's like IPL being given to Hotstar or Star Sports. Then the broadcasters, it's their job to figure out what is the ads they want to insert and where they want to insert. Similarly, on YouTube, we do not have much say on the live streaming or a content ad insertion. However, we can always add sponsorships, and that's what we do.
Thanks, Manish, for this clarification. I'll join back the queue for further questions on Europe.
Perfect.
Thank you. Request participants to please limit your question to 2 at a time. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah. Hello. Am I audible?
Yes, Rahul. Good morning.
Yeah. Good morning. So, firstly, just a small extension to a question which has already been asked, but on the Kiddopia side, I mean, we have mentioned that our rankings are moreover secured, and you have clearly mentioned that you want to top it up with the higher scale with a subscription growth as an mindset. But just wanted to understand your thought that will that be a more like a Q1, Q2 kind of a thing, or that is something like we have to get the subscriber growth irrespective of the cost kind of a mindset? Because I guess our consumer side of from a demand perspective must be still very robust given the category it is in. Then why to shy away from going for a big time growth when our rankings are intact and we can afford to spend in the existing opportunities as we are equally looking strong on the inorganic side? Why not invest big money in the organic opportunity itself?
Rahul, you're absolutely right. And that's why if you see, I mentioned 800K was business as usual. We are almost putting 600K extra on aggressive growth per month on seeing that how do we really kind of take it forward, combination of YouTube and brand. We would love to kind of do it, start from May and then continue it for at least May, June. Evaluate ourselves on how is it doing. Trust us, if we are seeing the positive effect, we are not going to shy away from investing into that business because this business has huge amount of conviction on the headroom it has for growth, and as you rightly said, the robustness of the product reflected in retention engagement continues to be very good. We will look at that in June, and then if things are even looking at 80% okay, we'll continue to do it in Q2. So this will be a constant review and take kind of a step on the next quarter rather than if I tell you that next whole year we are going to do this, I'm just kind of taking a blind making a blind statement, but the intent is what you articulated and our intent is exactly the same.
And we don't have any constraint from the founders in terms of any potential dilution if there's a need of infusion to do that.
Rahul, if you understand, founders are the guys who are really passionate about their product, and that's why our structure works beautifully. And they are spending endless hours to kind of really get back to growth because no founder likes to not see a growth. And in this process, if they have to take money, they will take money. Just for your information, Kiddopia already has 75 crores of cash with them, right? So it's not that they are not cash. They are also a positive working capital business, barring the brand campaign. So from all of that perspective, they have the cash. B, if they need the cash, neither they nor us will shy from putting in money.
Right. That's quite helpful. And if I can ask one more, on the RMG side, we have shared a couple of very interesting metrics in terms of how we have done the reduction in the break-even time period. I would appreciate if you could share the right KPIs for us to follow in this space to understand, how these things will play out and how the monetization here would play out. And also what kind of synergies we plan to bring by getting everyone into one platform. So more inputs here would be helpful.
So Rahul, on the KPIs bit, there is a bit of sensitivity on competitive information versus public information, right? The ROAS itself is something which is very competitive information because it kind of really exposes you from other challengers who can come after you. And this is a very competitive business. In spite of that, we came out with the ROAS. We've also told you cost per player ratio, and we have looked at what's happening. Let me kind of think through on what KPIs I can really share, which helps you in kind of giving a confidence on lead indicators, but also not kind of stymie the business competitive advantage which we might be creating. So let me come back to you over the next few weeks on what needs to be done there. Otherwise, the growth in their user base, growth in their revenues, and growth in their unit economics is something which can be at a high level, but it's an outcome. So let me come back to you on that. On the synergies, as I mentioned in my opening remarks, building one tech platform which can really power multiple brands at the consumer-facing level is the goal of this product tech stack. We have built it. Now HalaPlay is the first one. And as we move along in talking to other RMG players which can be complementary and add value, this is a common tech platform which will come handy. And this is the same kind of impacts, positive impacts which you have seen on the increasing the ARPUs of repeat users or retained users, having a predictive modeling on user acquisition will be given off the shelf to any other platform which will become part of it, besides removing the frictions which the user may have on their login or in their registration or in their deposit.
Right. Much appreciated. Just a clarification, you said something on the Nodwin that offline events this year would add something incremental revenue. I missed that number. If you could share that again.
70 odd crores is what I believe is the addition which we will see this year.
Thank you. I would request Mr. Jain to rejoin the queue for follow-up question. Also request participants to please limit your question to 2 at a time. The next question is from the line of Karan Uppal from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity. Hi, Manish. So first, a clarification on Kiddopia.
Sorry to interrupt you, Mr. Uppal. Your audio is quite low. I would request you to come closer to the phone or speak a bit louder.
Hello, can you hear me now?
It's the same. If you can speak a bit louder, I think it would be better for all of us. Thank you.
Hello, is it better?
Yes, thank you. Please go ahead.
Yeah. So firstly, a clarification on Kiddopia. So the revenue last quarter got impacted by around 6 crores due to accounting change, which was expected to be added in Q4. But if I look at Q4 incremental revenue addition, it's just 4 crores. So does that mean that on a quarterly basis, Kiddopia has declined?
No. I think you're reading it wrong. It was not 6 crores to be added back to the next quarter. It is just the rollover number, because what you were doing earlier is that because you are getting monthly data, your monthly subscribers, whether the person has come on 28th or was coming on 1st, you are taking as a month revenue. Now that you've started getting daily data, you had to take one-time hit, and that was Q3 of 6 crores, the hit which you took. It is not to be added back. So if you look at the real number, 53 versus 54 is what you will look at.
Okay, got that. Thanks. Secondly, on Kidopia, Manish, if you look at the CAC is now at 36 versus 26 a year back. So how high can it go from here? What's the upper limit for LTV to CAC to break even? And also any color on the subscriber growth for FY23?
I think what Rahul was asking a similar thing. The choices in front of us is that we look at bringing it down to 28, 29, 30 and throttle the subscriber growth. The choice is to continue to be at 36, and that 800K which I said is broadly at that same level. We'll continue to get what we are getting today, right? And the other thing is completely remove the guardrails of cost per trial and go for aggressive growth. And kind of we look at today our break even in terms of advertising spends comes in 12 to 13 months, which used to be 10 months. Right? And you can just take a call that, hey, listen, the market is very big, strong, and you can really go beyond CPT. I don't think we are at that stage in our mindset. We are saying that the cost per trial will remain at 36, 37, 35, whatever number, but in that range. As far as the performance marketing is concerned, when I will tell you the results for next quarter, I'm not going to add the brand marketing to it, because brand marketing can't be just added to a performance marketing and arrive at cost per trial. So I'll kind of report it in a separate number and give it to you. So that's what we are kind of really looking at. Are we going to go back to 28, 29, 30 level or 24? No, we are not. Because we believe that the product is very strong, market is very large, and we do not want to throttle the new subscriber addition just because we want to maximize EBITDA.
So based on your understanding as well as the experiments which we are doing with all marketing, what kind of a subscriber growth can we do in FY23?
Honestly, the brand marketing nobody can predict. YouTube, as I mentioned, in let's say in couple of months when we talk about June quarter, I will be able to give you some insights on YouTube whether it's working or not working. Right. As of now, let's keep them as an experimental ideas. From a business as usual perspective, you can look at a 5-6% increase in the subscriber numbers, right? But that's what, without any experiment, if we were not to do an experiment, if we were to kind of really just sit idle and sit tight on our cash, I don't see that as a optimal activity for us to be okay with.
Thank you. I would request Mr. Uppal to rejoin the queue for follow-up question. The next question is from the line of Subrata Sarkar from Mount Intra Finance. Please go ahead.
Hello.
Hi, Subrata.
Yeah, my question has been answered. Thank you.
All right.
Thank you. The next question is from the line of Kapil Agarwal from ITUS Capital. Please go ahead.
Hi, Manish. So I have just one question, and I wanted to understand the thought process.
Mr. Agarwal, your audio is not very clear. I would request you to speak on the handset mode. I think you are on speaker, so there's an echo.
Apologies. Is this better?
If you can come on the handset and then ask your question. Thank you.
Is this better?
Yes, Kapil.
Yes, now it's clear.
So, Manish, I wanted to understand the thought process behind the bonus issue that you've come out with. So I just wanted to understand the thought process behind that.
I will like Nitish to come in. It's his prerogative to answer this, and I would request him to do that.
Yeah, sure. So happy to share that. So, like I said in my opening statement, Nazara has had a 22-year history of creating value for its shareholders. And we just felt that, to appreciate our shareholders as well as commemorate, first anniversary of being a listed issue, this is something we wanted to do for the shareholders.
Understood. Thank you.
Yeah. Thank you.
Yeah.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah. Good morning, Manish. My first set of questions is on the esports side, basically on NODWIN. So you have mentioned that 21% contribution for the full year was from media, right? So if you can break the remaining 80%, and if you can also talk about the growth. The second part on the Nodwin is on the number of events which we are planning for FY23 to come to that 70-80 crore number which we are targeting, and if you can talk about this here.
Yeah, thanks for asking. Very good question, both of them. So if you look at, I'll answer the second one very easily. If you look at pre-COVID, we used to have India Premiership, which was roughly $1 million property. We used to have DreamHack, $500,000. We used to have NH7 generating around 30 odd crores. So you're talking about 30, 37, 5, 42. And then you had other properties which we acquired from OML of 20, 25 odd crores. And that's the breakup between Bacardi Shuffle, UT Fanfest, and there is one or two more properties. So these are all established properties, long-term properties, 7-8 years vintage, with brands who have been backing them up. And so that's where there's just a no escalation in their sponsorship. It is just coming from what we used to do in 2019 or OML used to do 2019. Yeah. On the non-media piece, your question, 20%. So there are 4 lines of business which we have besides media. I think somebody else had asked about IPs. So we have white label business. We have our own IP business. We have a D2C business. These are the other 3 businesses besides the media business which we have in our portfolio. And roughly white label business, the breakup we have not given of each of them individually, and we would not like to kind of really do that. But that's the 3 lines of businesses besides the media business which we have in our portfolio.
Yeah. If you can talk about the growth, if not the numbers, actual numbers, but what was the growth we had seen in FY20?
Absolutely. So if you look at the overall growth of what around 55% is what we are kind of really looking have generated in Nodwin, right? And if you see on that, we have said media business has grown roughly around 84%, right, in quarter 4. All our businesses have broadly grown in the similar lines, give or take some percentages here and there. And it is not that one line of business is kind of really creating or driving the overall growth. In this year, 22-23, with the addition of Wings as gaming accessory brand and Planet Superhero, and the events business really doing, we believe that could become a significant contributor to growth besides the offline event which I spoke about. And the D2C business can itself emerge as a great community unlocking exercise for us in going next 3-4 years. This year we may be in investment mode on the gaming accessory business, but going forward as the scale really happens, operating leverage is very strong, and we should be able to see this to be a good margin driver as well.
Sure. My second and final question is on the M&A side. If you can talk about what was the total outflow and divide it also in terms of cash outflow as well as the share-based outflow for FY22, as well as the pending for FY23 and our target maybe for FY23.
So I don't have a target for FY23. As I mentioned that we don't take a target and say that this is a chunk of money which has been allocated for M&A, because we are not doing an opportunistic M&A. We are looking for good teams first and good products first, and then kind of really deploy our cash. So there is no target, but there are white spaces as I mentioned, and those white spaces teams are working to fill that. However, are we kind of desperate to do an M&A to drive a growth? No. Our M&A is predominantly coming from our desire to continue to have our dominance in leadership and market share. That's where we are. To answer your question on FY22 total investments split into cash and equity, I can ask IR team to give it to you. I don't have a handy table in front of me, but we can quickly put it and send it to you.
Sure, Manish. That is it from my side. Thank you.
Ami, can you please take note of it and then we'll do it.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. Sir, just to clarify on the 70-80 crore number that you are saying the additional will happen this year. So that is mainly from the OML events, right? Because they were not happening. But when I consider your events, IP events, they were already happening in the online mode. So when you do in offline mode, how does your revenues change? I just want to understand that.
Dipesh, two things. India Premiership and DreamHack didn't happen even in online, if you see in 21-22. So those events didn't happen at all, right? And second thing, to answer your question, how does it change? I'm sure you've attended a lot of online conferences, and you know the engagement and the energy on online versus an offline. And the brands really shy away from sponsoring an online conference versus what they want to put in money on offline. Because that's where the real energy, excitement, interaction, everything happens. And which is why you would see many more events happening where the brands will be more and more okay, or even in your line of field or my line of field, business conferences starting to happen with sponsorships coming along, right? So we didn't do our events, and that's what we will do now.
Got it. So any number you can give to the DreamHack and the ESL India event, how much revenue they generate per year?
DreamHack was roughly around 3.5-4 crores, 4.5 crores kind of a number. India Premiership used to be 5 to 7 crores. Now, those are the numbers which we need to go and secure from our brand advertisers. There has been a gap of 2 years, and the brands have also kind of moved on. So let's kind of really work on those things.
Got it. Lastly, sir, on the M&A, you mentioned premium segment will be a focus area this year. So does it also mean that given the headwinds you're facing in the Kidopia, the acquisition in the gamified learning segment, that is 7 to 12 age category that you have talked about a lot of times, that has taken a backseat?
No, not really. Not really. Just that the opportunities in premium are far more because it's a game dev studios. Opportunities in 7 to 12 are lesser. And that's why we don't want to kind of do sequentially, saying that we will first do this and then go and follow this and then do this. It's purely a function of what is your ability to fill those white spaces across segments. Now, at the esports level, Nodwin has its own team and they can drive their own white spaces. Similarly, in Kidopia, now we are kind of really looking at them driving the white spaces. At freemium, at the corporate level, we need to drive because that segment is very small. And likewise in the real money gaming. So other two segments have their own strength, they have their own team, and now they are strengthening their teams down below for M&A. So there is no backseat there. It's a function of what we want to really kind of pick up and move forward from the opportunity available in the market.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you everyone for spending time today with us. We look forward to being in touch and delivering strong results in the year that's FY23. Thank you very much.
Thank you. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thanks everyone.